Okay, let's get into the stock market technical analysis. We'll look at some broad market charts, and I got some individual stocks we want to look at, and then we'll wrap up. So as I go along, please drop me a thumbs up if you're getting some kind of value in the content, and then also if you're interested in the private member group, link in the description below for that one. I'm putting out additional trade ideas and additional market insights in that private member group. Okay, we'll just go through the broad charts, and I want to cover some of these indexes. I'll show you guys what I'm looking at. Here's triple Qs. Again, continuing to kind of move higher. This trend line that I have is really, it's been violated too many times to really count it as a valid trend line, because you can see we were holding this trend line, but then here's your pre-NVIDIA drop. Here's, and then it popped above, broke again, popped, broke. So at this point, that trend line's not a really valid trend line to be watching. The futures, we'll jump over to the futures. You can see here that one looks a little bit better, where you basically have a trend line. It was broken and it's been back testing. All right, back test, and maybe it's going to continue. So we need to see an impulsive breakdown or a sell signal into, basically to initiate a short position. We do have negative divergence. It continues to build. These can build. Divergence tells you that the conditions are there for a trend reversal, but that doesn't mean it's going to happen today. Doesn't mean it's going to happen this week. It just indicates that you have conditions, and we need to wait for those sell signals. So we don't have those. Another look at this tech sector is XLK. And this one you can see is pretty clean. Here you basically have support, little there's your NVIDIA, pre-NVIDIA earnings, kind of fake false breakdown. We're still holding that, but we do have a wedge. All right, this is a bearish rising wedge, and we do have negative divergence showing up on that one as well. So XLK needs to break this lower trend line for the sell signal. We don't have that break. So until that happens, for the most part, it's just kind of a waiting game. I mean, if you're long, you can ride it. But, as far as I can tell, it's going to break soon. So that's XLK. XLF, which is interesting. That's our financials. You can see here, same kind of pattern, bearish rising wedge, negative divergence, starting to break, but it's kind of looked like this for the last couple days, where it kind of starts to break, and then the buyers step in, and it just kind of holds right around the trend line. We need to see an impulsive rejection. We need to see sellers, impulsively noticing that this trend's broken and selling. Maybe it's going to happen today or tomorrow. It's hard to say. Obviously, end of the day close is important, and this market has been plagued with intraday breakdowns, and then just to see things kind of shore up and recover by the end of the day. So take that for what it's worth, and I'll break down these sectors in the XLF. There's a couple key things I'm watching. So there's really Berkshire Hathaway. That one's on a sell signal. Again, you have a bearish engulfing candle, and there's been selling. All right, so that is on a sell signal. You also have JP Morgan. That one's still kind of hanging in there, and I think that's the reason why the XLF hasn't broken down. So I would be focused, on, if the XLF is going to break down, you need to see this JP Morgan start to break down as well. All right, I think something below this little trend line right here will do the trick. About 186.50 or something like that, impulsively breaking that. And then you have Visa starting to break down as well. You can see that one's down. And all of these have negative divergence. So, Visa, I think you need to probably take out these lows right here, about 273.50. You take those out, that should be the sell signal there on Visa. So that's XLF for the most part. XLY is your consumer discretionary, still holding bullish trend. All right, you can see support, reactions, and you're right there. Negative divergence, full negative divergence intact. The bearish, or the PPO has made a bearish PPO crossover. You've crossed over right there. So in general, it's all there in the charts telling me that breakdown soon. but it's not there yet. I this market's really extended to the upside. I think it's really crowded. So I don't think it's going to be a clean breakdown. It could, maybe it happens, but to me it seems like it's going to come in the form of a gap down. Okay, so the bulls are going to be buying the trend, they're buying the dip at support, and then it'll gap down, and they don't have the opportunity to get out of their longs. All right, that's what I think it'll do, and then it also doesn't really give the shorts a good opportunity to say, oh, it's broken down, let's jump in short. So, that's just my gut feeling. XLI, which is industrials, kind of holding this bearish rising wedge. Maybe can adjust it, but basically a bearish rising wedge. We have negative divergence. Oh, sorry guys, that one flips around on me. Negative divergence there on both momentum indicators. So it's the same look. They all kind of have the same look. Really, all the sectors for the most part look the same with these rising wedges. XLE, which is your energy, that one is at resistance right now. It's at downtrend line resistance. It doesn't look the same as the others where it hasn't just been rocketing higher. You have a downtrend. This one actually, you have some bullish divergence here. All right, so you can see that was a lower low in price, but higher low in momentum. All right, so that's bullish divergence on the XLE. So that's actually a sector that looks more bullish to me than anything. But no buy signal. You haven't broken out of this downtrend line. Okay, so let's flip over to some let me move this. Let's flip over to some just kind of individual trade ideas. SMCI. This one, we had the bearish engulfing candle right here. So that's the trade, you can trade against it. And really what you would not want to see is a daily close above the top of that candle. If you see it, it negates the candle. We did get that really yesterday, and they're kind of holding that up right there today. So to me, it's kind of high. At this point, it's a little too high of risk in order to continue to want to short that just because we're above the candle. The pattern's basically negated. Now, they're not going anywhere. You can see it's a battle right here. So, this thing is a volatile thing, and the market makers are all over this thing. I've seen it, basically they moved this thing a ton in the last 10, 15 minutes of the day. They've done it a couple of times. So, they might just be running stops and then it dumps. So, you could keep an eye out on it, but that's the candle's been negated because of the daily close above. So that's that on that one. LLY, this has kind of the similar pattern. This one's still intact, all right? There's your bearish engulfing candle with follow through the next day. And, basically there is still divergence, it looks like. Yeah, it's basically still there. It's kind of flatline divergence where you have an equal high. And the candle's still intact. So that's your reversal candle, and you just don't want to see a daily close above that candle. They're trying, you can see today they pushed it right to the top, right to that resistance. The sellers have stepped in. We'll see where it closes. All right, this trade's still intact, so we'll stick with that one. Okay, gold and really the dollar. Gold has been rising. The dollar's now starting to kind of fall. It is at some support right in here. You can see lots of reactions right there. So you're probably going to get a bounce in the dollar and maybe a pullback in gold. Gold to me still looks like a buy the dip, and the miners look like buy the dip. But I think you're probably going to get that dip here pretty soon. So flipping over to something like GDX, we got a gap to fill down here. So I'm kind of, we're above the 200-day. It's not that impulsive. I think they're probably just popping the 200-day, and then you're gonna get that dip. All right. So to me, I'm looking to probably buy the dip on gold and gold miners somewhere down around these levels here. That's really all I see there in gold. And interest rates obviously have been falling. Here's your TNX, your 10-year Treasury yield. They've been falling. I don't see any real indication that there's no trend change here. We kind of have over the last few days interest rates have been falling. And there's nothing to really go off of, so could continue to fall. We'll see. Obviously, if interest rates continue to fall, and especially if they just kind of ease off and not really collapse, but if they just kind of ease off, then that should be bullish for stocks. Because in general, especially the tech stocks and interest rate sensitive stocks, falling interest rates is bullish for those. And we'll take a look at those Mag 7 stocks. Those are really what's kind of driving this market. Mostly it's the semis and NVIDIA. NVIDIA up today. It's still just kind of marching within this channel here. We've got this kind of upward channel. It's kind of moving higher. It's at resistance or near resistance now, so you're probably going to get a little pullback. But the channel's still intact, so there's nothing to short there. There's no sell signals, and in general, it just continues to move higher. Apple still sucking wind. It can't seem to catch a bid, so maybe a little lower. There is good support on Apple around 166.50. You can see that's your former low right there where you got that bounce. So, maybe a little more downside, and it's probably good for a bounce long, maybe up to this downtrend line right here. That's a trade idea. We'll look for divergences or signs of that bounce, but again, that would be support, and I think you probably could get that bounce. Unless you see the rest of the FANGs and the rest of the Mag 7s coming down, then I think the buyers are going to step in, and maybe it's good for a 6% bounce or so. Google, they're popping it back above the 200. It's kind of been flirting with this 200-day moving average. So we'll see. Maybe there's a bounce in store here. This one's still broken. The trend's broken. So you can see there's your uptrend. There's your broken trend. We could backtest though. Like we've seen in some other stocks, the buy the dip mentality is kind of almost like ingrained in the investors. And so, there's your dip and they're going to buy it and it could backtest. So that's a potential. And then Microsoft, again, still, it's broken its trend. There you go. Support, support, support. There's another reaction. Broke trend. They're trying to recover it. So we'll see if that's just a false breakdown or if that is just a back test. As of right now, it's at resistance. Okay. So that's objective to short because the trend was broken. It's back testing. It's at resistance. If they reject hard, that's going to be a signal that we'll want to take note of. And then Meta, no real sell signals. There is negative divergence, but again, there's no sell signals. We need to take out, to take out some of these support levels to trigger the next sell signal. This is the big one, 452.75. That's where it gapped up on earnings, and so that would be the area. That would be a big one, taking that out. There's also an uptrend line, so no sell signal on that. And it's the same with Amazon, still holding that bullish trend. So there's not a lot of change in these Mag 7 stocks. Okay, I pointed out this one to the private member group. DVN, it's up about 1.5%. This one is on a breakout, so you got DVN. Look, this is an oil stock, so if oil stocks are going to continue to rise, that should be bullish for oil, but you've got resistance, resistance, resistance. Okay, this was a bullish falling wedge. You have bullish divergence. It's been building for a while, but there's a small divergence. There's a larger divergence. And then there's your breakout, really right there. And it's just continuing to march higher. Probably going right up to the 200-day, and then it'll battle it out up there for a little bit. On this one, the measured target is the widest part of the wedge. It's a big wedge too. So that's what I got for the widest part of the wedge, and you take that from the point of the breakout, and that really puts this one all the way up around 64.50, $64, somewhere right in there for the measured target. So this, I think, is just getting started. Obviously, it's going to have pullbacks along the way, but I can see this one continuing to move higher. And just another trade idea, not actionable yet, but definitely looks like a very constructive chart. Nutrien, again, this is kind of the inflation trade. So if we start seeing things like this rally and oil stocks rally, the inflation trade should be back on. And again, that's going to put pressure on the Fed. They're not going to be able to cut rates like they want to, basically. This one on the daily chart, resistance, you've got lots of reactions, plenty of reactions. You have bullish divergence here, all right, building, and it's kind of there's kind of an extension of the divergence, and we're coming up to resistance. Now, we need to break this trend line for the buy signal. So this might have a little more work to do. It can kind of grind around, but look for that breakout. That would be the buy signal. Again, I'll be pointing that out within the private member group. And that's really all I've got, guys. So I'm going to wrap it up there. Please drop me a thumbs up. Check out the private member group if you're interested, and I'll catch you on the next